So today we're gonna go over the trade that we talked about in the previous video. We were right here, right? I was, saying we're gonna look for a higher low to break, and then we're gonna wait for price to come back into one of these levels for an entry to sell, okay? And this was the fib to guide us for our take profit levels. Now, as more data formed, I posted under the previous video on Instagram and I believe on Threads. I said that this looks like it's still divergent. I've adjusted my trend line and we're going to wait for more data to form. Okay. So the trend line that I have was this one. We had it like somewhat like this, somewhere like that. We didn't have all of this data. So all of this that we have now wasn't really there. I saw this right here is what I saw. So I then adjusted my trend line like this. So divergence is when the RSI indicator is going in one direction and the chart is going in an opposite direction. So this was going, at first it was like this, right? We had it like that. And then as we got more data, it's like started to like this to me. So Powell, I'm sorry, not Powell. What's this guy's name? Hold on, it's a new chairman. Hey, Kevin Warsh. All right, so Kevin, they were on the meeting, they talked about the entrance rate. They gave like a comment that basically said that they were going to increase the rate pretty soon. Okay, they didn't change anything, the numbers are still the same, but that comment alone is what gave us the push, which is what we needed to come out of the zone, right? When you're trading, you have to understand both, like technicals and fundamentals. So the fundamentals is always gonna help push the market to where it needs to go, right? It all comes together. High entrance rate is good news for the US dollar. So talk about high entrance rate is going to cause gold to drop. Even though they didn't change the numbers, just him saying that alone is going to cause it to drop, right? So because of that, we had the break. This was on Wednesday. I'm going to take off this arrow. I'm going to hide the RSI indicator. This was at 2 o'clock. We had the break. We had the pullback. I took this sell down to this 27. Really quick trade, 20 minutes, about, let me see. Yeah, about 20 minutes, 25 minutes, 529 pips. Pretty good. And then as more data formed, we got our structure pullback. So this is the candle breaking the zone. Okay. Right? This is the candle breaking the zone. And then you have the structure that's forming. So this was this we just looked at, right? And then you have the actual structure that's forming. I'm gonna put the trade on here along with the fib. So this is the structure. Okay. We just looked at this. That was the minor trade I took. Now we're looking at this. This is the structure trade I took. So this was the first stopping point. So as it came here, I had my stop loss and profit. So all of this money that I made was secured. Then we had the TP still set for 27. Granted, right? We did get that drop that I talked about, but we didn't get the drop to the TP from here. Price pulled up some, and most people would have their stop loss like in this area, right? So had you taken the sell here, you probably would have been stopped out because of this push right here. So that's why I said, wait, I'm gonna wait for my sell because this is still divergent. You always want to wait for the break out of the divergence. That's your confirmation. And then you want to wait for that pullback. That's your entry. And you want to take that, you can take it to the next zone, right? This is your next zone, this gray box right here. Or you could take it to the TP, hold it to the TP. It's really up to you. As long as you're securing those pips as they're going to that next zone and you want to keep it going, trail it, adjust anything you need to just secure those pips. It could have easily, did this and then dropped. knowing gold does what it wants. So that could have easily happened. So that's why I had my stop loss here, because I didn't want to lose all of that money and then end up getting stopped out, and then it goes to my target area. So yeah, I think that's all I got for you guys. We could kind of reiterate real quick. We were here. We were here. We were looking for a break and a retest to sell lower down into the zone. As more data formed, I had to adjust my trend line because the trend line was, oops, delete that. The trend line was like this at first. Then we got the data. I adjusted it, dragged it out. Price continued to bounce off this trend line. When the meeting happened, we had the break. I took the candle structure down to a 27, waited for the actual structure to form, got in around this area, secured profits in the gray zone, and then took this down to the 27. It did go to the 61.8. And now we're just kind of sitting over here. I also posted on Instagram the breakup structure that formed. So it was right here. So if you missed the entry for the structure, right? You could catch the breaks of structure that are forming to follow the trend. So when I posted on Instagram, I said break of structure to continue the trend. That means that the trend is still bearish, right? If you want to catch the move, if you didn't catch it at the top, you could catch the breaks of structure that are forming as the momentum is continuing to fall. So this is a break of structure right here, right? If I zoom into like the 5 minute, you will see more breaks of structure forming. This great one behind us. Just multiple breaks of structure. As the momentum continues, this one is very minor. I'm gonna use this. Okay. All right, y'all. I'm gonna keep y'all posted on Instagram. Maybe we'll do another video on Sunday. Yeah, thank you guys for watching. I appreciate you guys. I love you guys. I'll see you guys in the next video. Bye, guys.